Hi, folks. Dan Bird here with the Daily Scan for Friday, March the 7th. Tonight, we're using the magic 8 ball to figure out what's going on. And the question is, will the market rally next week? Unfortunately, the magic 8 ball says, reply hazy, try again later. So let's see what's going on. Looks like it tried to rally today. Will that continue into next week? As always, I am not a financial advisor. This is for educational purposes only, and you have to understand your own trading style. Past performance just does not guarantee future results. So let's take a look. Go to the home page first. You can barely see it down here, but the market bias actually went sideways today. Very small. Weren't too many that changed. That's what a small line means. Long line means there were a lot of changes. Small line means not too many changes, but pretty much canceled each other out, bulls and bears. So it just went sideways. Let's take a look, and I'll show you what I mean. If we go back over here, you can see a bull and a bear right there, and a bull. So that was it. Those are the only changes today. So very little movement, but you can see the short term continues to rise. So that's giving us a little bit of advanced warning and maybe telling us that the market will actually rally next week, regardless of what the magic 8 ball tells us. And if you look up here, the day over day, week over week, we're now starting to get some green shoots. So we've got a green one in the short-term column. We have a caution or a yellow one in the overall percentage, still a red in the medium and a yellow in long-term. So overall, this is saying maybe this selling might be over for a little bit. We shall see soon. I think it probably will be. I think next week we have the CPI number. And I showed one version of that last night. I'll show another one tonight. But let's go back to the homepage real quick. Look at the S&P, see what that chart looks like. And what you'll notice on the S&P is it came right down, went below the 200-day. Yesterday it ended right on the 200-day. Today it went below it and then bounced back and actually closed higher for the day. So let's see. Let's see if I can delete this. No, doesn't look like I can. Oh yeah, there we go. So we don't need that anymore. So that's what it looks like today. Closed above the 200, so it went below it. It opened pretty much right at it, a little bit below, right at it, closed above it. So that, and it's a hammer. So that all of that implies that a rally probably is in store. Now we are below the 50-day, which is up here, and below the 21, which is the reversion to the mean. So reversion to the mean is very likely. Back up here to 59.30, something like that. The 50-day is at 59.80. So somewhere in that range, could even get up to back to 6,000. That's still, if we reversed and started back down, that would still make it a lower high. So we've got a lot of work to do to resume the uptrend, which I don't quite think the market is ready for that yet. But we might get that rally next week. So we shall see. Let's look at the NASDAQ 100. Should look similar. There's the NASDAQ 100. And yes, it's below this shaded area, closed right at it today. So it also may get a bounce, got a hammer as well. And probably just like everything else, a lot of things look similar to this today. So I think this could be the beginning of an uptrend. I know Powell spoke today and didn't say anything terrible. Next week is a CPI. We'll look at that in a minute. And Bitcoin. How did Bitcoin do? Bitcoin today actually sold off. So you can see it opened up here, opened kind of pretty much where it closed the day before, but tried to go a little bit higher, but then sold off most of the day. So Bitcoin actually looks more bearish than the others. It looks more bearish than the NASDAQ 100. So I've said before that Bitcoin and the NASDAQ 100 has been correlated, but it looks to me like it's beginning to become inversely correlated, meaning Bitcoin is moving the opposite direction of the NASDAQ 100. So that's not good news. It actually closed below the triangle that we're watching right here. So that could imply some further downside. 200-day should be pretty good support for it right here at about 83,000. Ended today at 86.3. Of course, it trades 24/7, so that may continue to go down. We shall see. But Bitcoin actually is not looking as good as the other ones. Okay, so let's take a look at CPI, which is coming up next week. And I want to look at it in a different way than I did last night. I used the bar charts last night, but if we look at headline CPI, this is how CPI is calculated. It's on a 12-month window. And the next one that opens, I showed the commodities last night that they have been coming down for the month of February, which is what this will be reported on. That should give us a lower report this month, and it's coming off a bigger one from a year ago. So this bigger one right here is going to drop off. If we get one that's even slightly or even equal to this, then it's going to show it in a downtrend. So last month it was at 3. I think the forecast is still to keep it at 3. I think it actually might go down. By the way, last night I said that the unemployment rate probably would go up slightly from 4 to 4.1, and that's exactly what happened today. So I showed you why last night. If you want to see that again, go back to last night's video, and I explained why I thought that, and that's exactly what happened today, 4.1. So not dramatic, not acceleration, nothing that's going to worry the Fed at this point. Nothing that's going to cause them to drop rates. And if CPI comes down a little bit, even just a little next week, then that will just confirm to the Fed that they're on the right track and they're not going to do anything. So we shall see next week. All right, let's take a look at the VIX and see what it did. Is it telling us anything about what the market might do next week? So the VIX came down, but it's still above 20. So bulls are still in control. VIX shows a blue bar, which is neutral. Came down to lower than yesterday, so the VIX did pull back. So that's positive. But the 12-month rate of change is just going through the roof right now. So this isn't really giving us any clues, I don't think. But I still think the market is extremely oversold. So it would not be surprising at all to see it bounce next week. You can see with the Magnificent Seven, we've got Costco. Costco reported, looks like they missed. So they got a red bar. So these little boxes on the left just tells you the color of the bar. So that's a red bar, green right here, like Apple has a green bar, and the other ones have a neutral bar. So it's either neutral coming off of a down, which gives it a green neutral, or it's a neutral coming off of an up signal, which gives it a red neutral. So that's what it looks like. Costco missed. Apple actually looks like it's starting to tick higher. It actually got a green bar today, and the medium term went up. So let's take a look at Apple just for fun, see what that looks like. I could have clicked on the one down there, but here's Apple. And there's the green bar right there above the 21-day. Momentum starting to curl higher. The ADX is not yet crossed, but this actually should have a green arrow right now. So let's put that in. Let's put a green arrow in for Apple. Right there. For those that are using stock charts, one way you keep the lines perfectly straight is as you draw it, hold the control key down. And that makes the line perfectly straight up and down or perfectly straight left and right. Okay, so that's what that looks like for Apple. Apple's the one that looks the best out of all of them today. You can see right here, Apple has not quite crossed. Let me look at that. All right, so let's let's go back and it hasn't crossed. However, it did it did go above the 21 day, so that's good. All right, so um, there's something I'm going to talk about next Tuesday. I'm not going to show it today, but I changed this right here. This is called the new Dow theory. So next Tuesday, I'm going to talk about Dow theory and the new Dow theory, explain what that is, and show you what I put in here to help you kind of monitor the market and see how it's doing versus the Dow theory. So stay tuned for that next week. I want to go through some of the symbols that people asked about. There's quite a few of them actually, and I want to thank everyone for putting comments in last night. There are quite a few people that actually put comments into the chat section, and I really appreciate that, especially because it gives me an opportunity to respond and answer questions, that type of thing. And also, you can put in symbols, which I'll look at. But I really appreciate putting comments in there. So let's look at the dashboard real quick before I get to that. Equities were up 200 points on the Dow. S&P was up 31. NASDAQ 100 was the best performer right here. And the VIX, you see, ticked down slightly. If we look at bonds went the opposite direction for 20-year. 10-year actually went up today. So even though the 10-year went up, the market went up as well. Commodities, gold went down. These commodities went up. Gold, silver was below the open, came back towards the end of the day. Copper was down. Gasoline kind of flat, little bit higher. Natural gas has been doing really well. And crypto, you can see right here, here's Bitcoin. Bitcoin ended lower, below the open, certainly. And Ethereum right there. Okay, so if we look at over here, these are the stock charts technical ranking. That's what SCTR stands for. And these are the top performers today. Broadcom, Duolingo, and CRDO. Those are the top performers there. If we look at utilities, first of all, or sectors rather, if you look at sectors over here on the right-hand side, the middle one, you can see the ones in dark green had more advancers, had quite a lot of advancers. So staples, energy, utilities, real estate. Those are all defensive sectors. The ones that are in darker red are the ones that had more decliners. So discretionary, financial, technology. Those are all aggressive sectors. So that's not what you want to see if there's going to be a rally. But it was just a small one today. We'll see if it holds next week. So if we look over here, you can kind of see the same thing. Technology actually is up there in the top three. We can do the RRG, relative rotation graph, and you can actually see the rotation right there. So all of these are starting to move up into the leading quadrant. Technology moving down, discretionary moving down. The only aggressive that's hanging in there is XLC, which is communication services or the internet group. Energy is moving back up into the leading sector right now as well. So that's what that looks like. Let's see. Let's go back and look at the industry groups down here. Renewable energy did well today again. So let's look at that. So you can see it's continuing to tick higher. So this could be coming off of a bottom right now. It's got a lot of work to do. And everything is implying right now that it is in a confirmed downtrend, and it has not broken that downtrend yet. There's the 21-day, the cloud up here. There's the 200, the 50. It needs to get above all those to really confirm the uptrend, but it could be making a short-term rally. So if we go back over here on the charts page and look at the stocks for renewable energy, we'll see what performed today. There's Array Technologies. Again, coming off of a bottom right now. Here's Plug Power, Fuel Cell, First Solar. These all performed well. You can see the technical ranking though is red, so they've been near the bottom for quite a while. All of these are energy stocks. There's Enphase, Solar Edge. If you look at this on a 1 week basis, Array, Fuel Cell, Plug, these are all the outperformers. You can see a percentage change just for the week. Enphase up 7.5% this week. So that's where a lot of the movement is right now. That's where you might be able to find some at least short-term potential in those. Okay, so let's go back and look at the dashboard again. What else do we have here? Anything interesting? Computer services, hotels, oil equipment, semiconductors. Number 9 on the list. So semiconductors making a comeback as well. It was red last week. So if we look over there, let's just see what gained today. Wolfspeed. There's Broadcom. I think they had earnings. ARM Holdings for the week. There's the biggest performers for the week. ACLS. This one had been doing really well a couple of years ago. Broadcom is way down though for the week. So they just reported. So that's a way that you can see what the best stocks are as you look at if you have a dashboard like this on stock charts. And if we look over here at my top 10 list, Broadcom, of course, sitting right there, looks like it's starting to recover. So this might be, for those that might have been waiting to get into Broadcom, this could be a good opportunity. Duolingo, same thing. It was way down. Looked like they missed earnings back here. Celsius Holdings starting to recover as well. So a lot of these look like they're coming off the bottom. CLS, Celestica, that had been a real big performer. This was on the top 10 list for quite a while. So you can see the little chart there. It's starting to come back too. Fubo, down near $3, starting to come back. So you can see the percentages. This is just for today. Noodles and Company. That one has a hammer. Let's look at the bottom performers. Reddit, continuing to go down. Gorilla Technology, which had been doing really well, but it's rolling over. Lunar. Let's go back a couple. See if there's anything of interest. Commvault, software company, still going down. American sports have been doing really well. Lilly, look at that. Lilly, I'm going to show you something else with Lilly. Lilly is in the 30 worst performers out of 36 times 10, so 360, roughly 360. Lilly is in the bottom 30 of all of those. All right, let's go back here and take a look at a scan that I created. And then I'll look at the charts that people ask me about. All right, so I'm going to go over here and run this daily scan 20. Actually, I already ran it. So here's the results. These are doing the opposite of the 5 crossing the 21. In this case, the 21's crossing the 5. But in reality, it's just before it crosses, usually 1 day before. This is the daily on the left and the weekly on the right. Look at this one, ASND. This is biotech. Had a big gap up, but rolling over right now. So the 21 is just below, the close is just below the 21, but the 5 has not yet crossed over. So getting ready to. Here's Lilly. Lilly made the list. There's what Lilly looks like today. I don't know what the news was because Novo is on here as well. So it looks like it has something to do with the weight loss drugs. If anybody knows the answer, post it in the comments section. I'm sure lots of people following Lilly out there will know. But it looked like it was rolling over anyway. So it was really, the momentum was coming down. The ADX red is just crossing the green. So this is probably a normal pullback for those that have been looking at an opportunity to get back in to Lilly or to add to their position. The 200-day is right there, so that's one to watch. And then the 50 is down here. So either one of those could act as support. Again, for me anyway, each person can make their own decisions. But for me, I don't buy it just because it hits that support. I want to wait to see if it's going to bounce and go back higher. But it looks like Lilly might be giving folks an opportunity. On the weekly, it still has momentum heading higher. So it still looks like it's got a lot of momentum to the upside, and it has to break through this resistance over here at 950. This could also be a lot. Let's use this daily one over here and go back some. So what you can see right there, and I'll turn this on, right back in this area on the left-hand side, back in this area right here is where these people bought and it saw it go down, came back up. They wanted to break even, so they sold. But somebody else bought right here and then it went down. They want to break even now. So in this case, and a lot of people here bought, so they want to break even. So that's what might be happening. Now, this could also be creating a cup and handle pattern. We don't know that yet. We have to wait to see because the handle can't be too low, too sharp. But if it comes down to around the 200 day and then starts to curve back up, then it very well could be a cup and handle getting ready to blast off. But again, that's just a observation on my part. That does not mean that's what it's going to do or what it has to do. Just an observation. All right, let's take a look at some of the stocks that people ask me about. And I'll give my opinion here. One is Cardinal Health. Cardinal Health, this person got in on the 21st. So that was right here, right there. And you can see it's basically been going sideways. Monster squeeze up here, though. Look at that squeeze. That's a really long squeeze. That just basically just says it's building up energy. And it's going to explode out of this squeeze one way or the other. You don't really know which way, but one thing we can do is this is healthcare medical supplies. So if we jump back over here, and first we can look at healthcare in general, see what the sector is doing. And the sector actually is starting to recover, making a comeback. It got up here to the resistance line, but got rejected. So it's forming a little symmetrical triangle right now. So it could break out either way. You don't really know. If it does break out to the top side or the bottom side, actually, either one, it's probably going to do so with a lot of energy. So sorry, I can't give you a better idea of which way it could go, but let's look at medical supplies, look at that chart, and it looks extremely similar. So it's even a more clear symmetrical triangle. It's up near the top of it with 21 moving higher above the 50. So that's implying that it might be perhaps going to break out through the top, but it hasn't done so yet. But it doesn't have much room to go before something is going to happen. Sometime in the next 2 weeks, probably. Something's going to happen. It looks like it might break to the upside. And with that monster squeeze that CAH has on it, could very well continue to go higher. So that's what it looks like on CAH. The other one was Paychex. Paychex used to be one of my customers when I was working, selling software years ago. So Paychex, you can see, is broken out on this is on the daily on the left, is broken out. It had a squeeze back here. The squeeze kind of dissipated. It didn't have a huge move out of that. But right now, as of today, and earnings are on April 2nd. So earnings are still about a month away. But it had a good move today. And the weekly looks great. So, and the volume looks great. So this one actually looks pretty good. The green ADX is just moving back above the red. So this one could actually take off. Let's see, the date this person got in was the 18th. It was right there, right here. So after it had pulled back and started making a move higher. So that's a good entry point. So that's around 150. And right now it's up here around got in 218, right there, about 150. So up here it's at 153. So it hasn't moved that much, but looks like it's continuing to go higher. That one looks pretty good. Let's look at the other one somebody asked about, which actually looks great, is Fastenal. FAST, huge squeeze. Look at that. Now this is a squeeze breakout right now. So monster squeeze right there for a few weeks actually. They have earnings on the 11th, so that's still a month away. 2 days in a row, big moves higher. So it closed right at the 21 right back here on the 5th. So this one absolutely, and look at the weekly. If you're just trading for long term, the weekly actually closed above the 21 back here on February 10th. And the last 2 weeks, the volume has been exceptional. So volume looks great. Momentum looks great. This one, I think, is just going to continue to go higher until it gets up here to resistance at about 83, 84. So it's got about $4 to go still. So it's about 5%. And then it probably will hit resistance and pause. Doesn't mean it will come down, but it could pause for a little bit before it goes higher. But that one actually looks really good. Another one was a IAUM. This is a gold trust, micro gold trust ETF. This one, along with gold, so this is going to follow gold. Gold actually has had a great run. Took a little pause right here, and now it looks like it's starting to head higher again. So momentum is going down below the line, though, so it might continue to move sideways. That's what it looks like to me. Gold might just go sideways for a while, but still looks healthy. Doesn't look like there's any issues with it. Hovnanian. This is home construction. I talked about this yesterday. It was one of the top industry groups. So it looks like it's bottoming down here. Already had earnings on the 24th. Look at the weekly, went below the 200, and now it's sitting right above the 200, just like the rest of the market, actually. And it's got a hammer on the weekly. So this one actually might be ready to start to move higher. It looks like it might be a bottom. It's not confirmed yet until it makes a higher low, at least. So it doesn't necessarily have to make a higher high yet. But if it goes up and comes back down, but does not come back down to 95, which is where this low was, and then starts going back up, that shows a higher low. And that would be very good news. So that's the thing to watch for. But the momentum starting to move up. This might be looks like a really good place to get in for Hovnanian and maybe the rest of the home construction, home builders too, as I mentioned yesterday. HSBC is the last one. Oh, no, there's one more. HSBC on the daily, it's got a hammer. So it's wasn't too impressive today. Momentum is really high. So this is in the financial group. They had been doing well, but this one could be getting to the end of its life. So here's the Keltner channels. You can see it actually went into the 4x, maybe in even the 5x range in the Keltner channel. So it's likely going to pull back to about back to the mean, which is 55. So today it's sitting at, let's see, closed at 58. So this one could pull back before it tries to head higher. That's what it looks like. And then finally, CAG, ConAgra Brands. This one looks really good. So it's just beginning to make its move. It had a squeeze on down here, so it's executing out of the squeeze. This is so right yesterday probably would have been the best opportunity, but today the squeeze actually fired. So the thing to do now is watch 8 to 10 bars, or if it gets above the 3x Keltner channel up here. That's what John Carter would do. So that's the thing to watch for this. ConAgra is food products. So this looks like it's just beginning to really take off. Right through this area here is where the squeeze happened. You can see whenever something goes sideways like this, that's usually what this what creates a squeeze. And the green went above the red back here, right in the middle of the squeeze. So that was giving you some advance warning that you probably could even have got in a little bit earlier. But this one looks great too. So that's it. That's all of the ones for today. The last thing I want to show is on the portfolios page that we did, as I mentioned yesterday, we did get a cash signal on the VTI weekly. So the market timing strategy for the long term says go to cash. It had been bullish since November 3rd of 23. So this just happened today. Now, if we get a rally, and it looks like we might get a rally next week, this will continue to go higher, but this won't change because we're in cash right now. In other words, this VTI weekly, we'll look at the chart, could very well go higher and even could go back above the 21 next week, which if it does, we will have to make a decision if we want to get back in or not. But for me, I think that it is going to be a short-term rally before an additional downtrend. That's what I think is going to happen. And if we get back and look at the short term, the daily one, which is now short as of 224. So this one you could be playing the leveraged inverse ETFs. And I drew this line right here to show the trend line. So that for me would be the exit point. If it closes above that trend line up in here, that would be the time to take profits on this. This is more of a short-term trade anyway. That would be the time to take profits and get out, stand aside, and let the market rally. I am going to be watching for a rally and then a rejection up here around the moving averages, 21 and 50. And then I would consider getting into the inverse ETFs right back up there if it gets rejected. It goes back down. All right, that's it for today. Thanks for watching. Please leave me your comments. I love reading the comments and also especially the symbols that people ask me about, because it gives me a chance to take a look at see what the charts look like. By the way, I'll just mention, because I've had this request from a couple of people, I am going to get a better microphone probably this weekend sometime. So next week the sound might actually be a little more professional. But at any rate, hopefully you can hear what I'm saying. So that's the important thing. The content is the important thing. So thanks for watching. Please like and share and subscribe. And give me any comments you have or anything you would like me to cover next time. Thanks, everyone, and have a great weekend. Take care.